Hello again, everyone. It's Kim Hong here to share another trade idea with you guys. Okay, today we will be looking at dollar yen. Testing 1.5-year high. Okay, so for the past few days, we actually see a strengthening in the US dollar. All right, why is that the case? Okay, this is because it all comes from the hawkish Fed tone being delivered last week, okay, due from the monetary policies decision. So the central bank, Federal Reserve, actually announced not a tapering yet, okay, not a tapering yet, but what was actually hinting that a tapering announcement may be made soon, okay, probably during the November meeting, all right. And on top of that, in their quarterly projection materials, the committee members actually, well, more committee members are actually projecting a earlier rate hike than the previous forecast, than the previous projection released back in June, all right? So because of this hawkish Fed meeting, all right, we are now, the market, okay, in general is now expecting an earlier hike, okay, an earlier rate hike coming from the Federal Reserve, all right? And because of that, it actually led to a rise in bond yields, all right? And when bond yields rise, especially treasury yields, okay, that will directly have a positive impact on the US dollar. Hence, the US dollar has been strengthening for the past, well, since Monday, okay, since Monday, all right? So, dollar yen, not surprisingly, all right, traded to a 1.5-year high, okay, around the 112 handle. Now, let me switch over to the chart so you guys will get a clearer view. So this is the daily chart, all right? And I think I'll go over to the weekly chart so you guys will know what I mean by 112 level. Now, this is the weekly chart. The dollar yen has been testing, all right, probably like 3-4 times already. See a couple of times over here, 2 more times over here, 2 times back in 2019 March, and 2 times back in 2020 March as well, coincidentally, all right. And then there's once in June this year, and right now, okay, it's actually testing the 112 level, 112 handle again, okay. So 2.5 years of testing to breach above this level, but there's no result, right? It just came back down. The result was just, it was just like failed attempts, okay, of testing to break above this level. So personally, I feel that this is a very strong resistance, all right? 2.5 years, failed to break above after several attempts. So, if this time around, will it break above? Well, it all depends, all right? If it actually breaks above this 112 handle, then I would say there is actually a potential, what do you call it? Uptrend, okay, coming in, all right? So the upside of dollar yen will be high, which is why I set a buy stop order at 112.5. Okay, normally I would set slightly lower, but this time around I would want dollar yen to have a clear break above this 112 handle before I'll be looking to buy. Okay, so if let's say this trade idea were to, trigger, where would my stop loss be? Okay, so from here, the 112.5 level, we can actually set it here, all right, which is very, 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 very conservative, very safe, but it's actually some 370 pips stop loss, which is actually very, very wide, all right. Personally, I don't think I'll be taking that level. Okay, it's way too low to me, all right. I may actually be looking at something below 111, so probably like 110.7 or 110.8, which is around 170 to 180 pips stop loss. Okay, now as for take profit, I will I'll have to switch over to the weekly chart. I will be looking at somewhere around here, which is around, again, 170 to 180 pips of take profit, okay? So it's a, I would say 1:1 risk-reward ratio for this trade idea, all right? So just pay attention to the bond yields at the moment, okay? That's one of the major, I would say, major events going on, all right, in the market. Another one being the Evergrande, okay, the Evergrande saga. As of now, I think they have not made any repayment of the interest to bond holders, okay? So that may actually cause some movement in dollar yen, okay? Although during the monetary policy meeting last week, Fed Chairman Jerome Powell highlighted that the Evergrande saga is unlikely going to have too big of an impact on the US market, okay? But then again, you know, because Evergrande is like China's second largest property developer, all right? So its collapse, okay, its potential collapse is actually, you know, it can actually cause shockwave across the market, the global market, right? So more or less, it will still have some impact. So just pay attention to these two major ongoing events, all right? And also take note that next week is the release, next Friday, okay, it's the release of the US non-farm payroll data. That is the third item, key item to be paying, that you guys should be paying attention to, all right? Because as Jerome Powell has mentioned during the meeting last week, he's not expecting future jobs report to be stellar, okay? He does not need stellar figures in order to be convinced that the employment market, okay, the jobs market in the US has made substantial further progress, okay, towards, you know, towards their goal, right? All he needs is just a decent report. I mean, all these is very vague, very vague. There's no figures, all right? There's no figures like, say, 300,000 jobs being added will be considered a decent figure, or 500, right? So we'll just have to pay attention to the figure. Take note that the previous release was around 200,000 jobs being added, all right? So this time around, if we see anything above 200,000, personally, okay, disclaimer here, personally, I feel that it's safe. The jobs market, the US jobs market is in the safe zone of making substantial further progress towards the Federal Reserve goal, okay? So yes, these three items are what you guys should be paying attention to, a lot of attention to, okay? So with that, I will see you guys. Okay, if this trade idea gets triggered, I will inform you guys in our Traders Club platform, all right, EcoFin platform, and also through our Facebook group, all right? So if you guys like this trade idea, just give us a thumbs up. We will be uploading videos on a daily basis from Mondays to Fridays, all right? And if you're interested in joining our free daily webinar, our currency call from Mondays to Fridays at 11 GMT plus 8, all right? Check out the link at the description below, jintaotai.com, all right? Head over there, you'll find more resources that will benefit you guys, that will help you guys in your trading journey, be it you guys being a newbie or intermediate trader, all right? So with that, I will see you guys in the next currency call. Take care for now. Bye-bye.